Shares of Deere, one of the worst performing stocks on the S&P 500 right now. The farm equipment maker handily beat profit and sales expectations, but there's concern that even that boosted outlook does suggest a bit of a slowdown. Rob Wertheimer is partner and director of research at Melius Research and covers Deere. Are you as concerned that the outlook for Deere does signal a slowdown?
I'm not actually. I actually thought that both the results, as you mentioned, and the outlook were quite strong, positive relative to what I would have thought. And so, what Deere did is had a very strong quarter on price, on margin, on operations, and really clicking quite well operationally. But they didn't raise the full year outlook, and there's only one quarter left in their fiscal year by as much as they beat our estimate by. And so, I think people are interpreting that to be a slowdown. They also have other data points, though. So there's early order programs on some of the large farm equipment that they sell into the market, which I think are proceeding quite well. And what I think we're seeing is more just a reaction to either conservatism in the fourth quarter or a return to more normal seasonal patterns as they've been producing flat out in prior years to try to get farmers what they need. So no, I don't think it was quite as negative as the market is taking it at all.
You think the stock can get to its all-time high and then surpass that? You see some 25% upside for Deere. What gets you there?
We do. So there's a couple things. So on current earnings, Deere's trading something like 13 times, which if you're a machinery company and you're approaching mid to high cycle is not a crazy valuation. I've often thought those are too cheap, but that's understandable. But Deere also has within its capabilities the ability to sort of transform agriculture to solve a lot of problems on, crop inputs, on pesticides, on herbicides, on applicants that you put into crops that have caused, potentially some environmental damage, necessarily so as we grow crops. There's just a big tech opportunity out there that's gaining steam and which I think should elevate those valuations to, well above prior ranges. So that's a big part of why we see upside.
Deere's exposure geographically is largely North American. As we think about today's market anxiety around China, do you view Deere as possibly insulated from that?
Yeah, it's very interesting. A lot of the stocks in my world are trading on, typical patterns of volatility or beta as, China has rocked the markets. Obviously, China has, importance for global grain markets and consumption and so forth. But yeah, Deere has very little direct exposure. And so as, news like that kind of makes waves across the markets, it doesn't change our estimates one way or the other.
Caterpillar is another one that you cover. It's near record highs as well. But again, shouldn't there not be some vulnerability baked into a big slowdown in China?
No, there is. And for Cat, there's a more direct exposure in two different ways. I mean, for one, Cat does sell construction equipment to China. And though that's already taken a pretty big hit, there's a little bit of revenue vulnerability there. There's also the question of the materials complex. And so Caterpillar, powers a lot of equipment in global mines and global oil and gas production, et cetera. And so if commodities have been driven up by China, over the last 20 years, let's say, Cat has benefited from that. Now, there's a flip side to that, however, in that the energy transition that the world is trying to undertake is massively, materials intensive. And we have not yet seen a mining upsurge to, outside of some small stuff in lithium, occasionally nickel. We haven't seen the upsurge in investment that's needed to kind of power the world's transition into solar, into battery electric, and into other forms of clean tech. So in some ways, China almost has to slow down to make room for some of the investment spending, multiple trillions of dollars annual investment spending that has to come.
There's those kind of macro building factors, and then back to farming and agriculture. There's a concern by bears in the space that the farming cycle is past its peak. Corn prices are off, wheat prices are off, and the farmer is just not as flush.
Yeah, I mean, so there's a couple of different answers to that. For one, we've kind of baked in a similar thought into our estimates for a couple of years now that we'd reach a moderately high cycle and not, hopefully not, in fact, see the kind of bubble that we saw in 2012 when a drought and other factors sort of led farms to really overspend on equipment. So, a peak, quote unquote, is not a terrible thing if you're at a reasonable valuation, and especially for Deere, if you have the ability to, drive down farmer crop inputs as they reduce, through high technology fertilizer application or, crop treatment applications to just reduce some of those inputs by 60, 70, 80, 90%. Massive value that can come to farmers and in some ways to the world through environmental improvements. So there's multiple levers here. Deere has that one, and it also has construction. So not everything is at peak, and not all the value drivers are maximized yet.